Hey guys, Ethan here with Metcalf Partners Wealth Management. Talking to you today with your Metcalf Money Moment of the Week. Wanted to talk a little bit about politics, and more specifically politics and how it relates to portfolio construction and investing. The answer, they are not correlated at all. We don't make investment decisions based on who's in the president's seat, and neither should you. So looking historically back into early 1920s, and up until most recently, I would say yesterday, the trend of the overall stock market has been positive. Doesn't matter the color, red or blue, or whoever's in office, Republican or Democrat. It doesn't matter, and we don't base our decisions in the portfolios based on who's in office. Then there's an argument saying, well, the policies matter. And yes, policies, of course, matter whether you're looking at tax policies, corporate taxes, things of that nature. Sure, policies do affect how the overall stock market reacts. I would also encourage you to not necessarily think about that. That's really a short window of time, and policies also take time to be put into effect. Something that gets voted in as a bill today, it might take 12 months before that bill is actually enacted and that policy goes into place. So the overall economy itself is so big that these decisions don't necessarily just weigh on the president. He's got a cabinet, he's got the House of Representatives, Congress, Senate. There's a lot of players in this realm that doesn't necessarily put everything back on the shoulders of the president. So think about that a little bit too. The Fed, talking about interest rates and inflation, they're probably going to have more of an impact on the stock market than the president is. So when you look at, hey, if Trump is in office or if Biden gets elected, what's that going to do to the economy? What's that going to do to the stock market? That's a very narrow window of time, as I mentioned before. We look at the next 20, 30, 40, 50 years. And when we look at our clients' portfolios and how do we structure those prudently over time, we make sure we're diversified. We've got a good basket of asset classes. We look at costs inside the portfolio. There's a lot of other things that would impact those portfolio decisions rather than the simple blanket statement of, oh, a Republican's in office, the market's going to do bad, or a Democrat's in office, the market's going to do bad. I would encourage you all to take a step back from that and kind of just let the election be the election and let your investments be your investments and don't commingle those, because that's when you're going to make knee-jerk reactions that could possibly have bad effects in your portfolio over the next 20 or 30 years. So don't let an election cycle deter you from investing either. It does pay to be invested and remain invested. So those knee-jerk reactions based upon politics and political decisions are what we try to stay away from. So again, this is Ethan with Metcalf Partners Wealth Management, and that's your Metcalf Money Moment of the Week.